US consumers in focus ahead of this week's data deluge. Welcome to Market Insight, I'm Thomas Warner. The resilience of the US consumer has been a constant theme of the current three-year-long period of high inflation, but with signs emerging that the jobs market may now be starting to cool off, could we finally be set for a slowdown in spending? Joining me now to talk about all that is Randy Watts, Senior Portfolio Manager for O'Neill Global Advisors. A very warm welcome to you, Randy. This week we have CPI, consumer confidence and retail sales data, so it's a major week in terms of what we might find out about the consumer. Where do you think we'll be at the end of the week?
I think what we're going to see is that inflation is slowing on a year-to-year basis, though it may be flat or slightly up on a month-to-month basis. I think what we're going to see with the consumer is that spending is slowing there as well, though expectations for retail sales this week are for actually an uptick from last month, where retail sales were actually down on a year-to-year basis. What's really going on with the consumer is they are cutting back discretionary purchases. They are being much more price conscious, and in many cases, they are trading down between brands and items to less expensive choices.
Well, Randy, Walmart really was one of the main beneficiaries of that during the first quarter, and they report their second quarter results this week alongside Home Depot. What are you expecting from those big US retailers, and what do you think it will teach us about the US consumer?
With regards to Walmart, we are expecting a decent quarter. I think there's a chance they could raise guidance after the quarter. What they're really seeing is they're seeing an increase in their grocery sales. They're also, interestingly, seeing more higher-end consumers start to shop at their stores. So really, this cost consciousness is affecting all segments of the U.S. retail market. With regards to Home Depot, I think what we're going to see is a lot of discretionary projects in home improvement are being put off by the consumer, and really their spending on the home is where it absolutely has to be done, things that are essential. But I don't think you're going to see a big pickup in Home Depot's sales this current quarter.
Well, Randy, it has been a tumultuous time in the markets, and this could turn out to be a pivotal week for US stocks. Do you think we're through the worst of the anxiety over the yen carry trade and those weak jobs numbers?
I don't think we are. Essentially, what's going on with the market right now is it's trying to figure out exactly how much slowing is going on with the economy. The Fed hasn't started to cut rates yet, so it's still waiting on that. And obviously, there's anxiety about both the election and the global geopolitical, with two wars underway. So I think the market has got a lot of reasons to kind of correct right here. We don't think the correction is likely done. We think at a minimum we're going to need to have a sideways pattern for a few months, but I think the market can pick up later in the year once we get through the election.
You've obviously been having to deal with all of this when you've been making your allocations. How have you been dealing with elevated levels of uncertainty, and where do you think the opportunities are?
I think with slower growth and the Fed likely to be beginning a easing cycle, what we're really looking for are companies with strong secular growth characteristics. I would say the four big trends we've been playing are really security software, the need for security, GLP-1 weight loss drugs, AI, and the increasing demand of electricity within the US economy. There's going to be a lot of needs on the utilities, and we think they're going to see more power production come and also higher power prices.
You have raised AI there. Do you have a particularly strong feeling about whether or not AI still has as bright a future as everybody was hoping?
Well, I think there's two parts to the AI story. The first part is there is going to be a lot of spending over the next couple of years on companies ramping their AI capability. So the companies that benefit from that increase in spending, like in NVIDIA, we think are going to continue to do well. The second part of that AI are the companies who are actually using it. And we think initially a lot of those improvements are going to come on the cost side. So companies that can improve their margins and become more efficient by employing AI in their corporate systems. So that's something we're really looking at, but I think it's a couple of years out from where we are today. Right now, today, it's about the spending to increase the capacity for it.
Just finally, Randy, do you think a hot CPI reading this week could spark off another major sell-off?
I think it was very, very hot. It would, because it would lower the chances of a Fed cut. We should note that right now the market is predicting a 100% chance of a Fed cut in September and a 63% chance of a second cut in November. But I think the way the trends have been, that is unlikely. I think it's more likely that CPI is either in line or slightly soft, then we're going to get a very, very hot print, especially with the US job market slowing down a little bit here.
Thank you very much, Randy Watts, Senior Portfolio Manager at O'Neill Global Advisors. and that is Market Insight. Don't forget you can watch more videos on Reuters.com.